Welcome to Seeking Alpha Editors Roundtable, what moved markets this week for the week ending November 19th, the week right before Thanksgiving in the US. And one would expect volumes to be a bit subdued, perhaps, but that's not what's been going on. It's been an eventful week. Stocks are still clinging to gains. Most of them, the Dow isn't, but the S&P is, and Nasdaq tech stocks are actually up pretty big for the week. There was quite a bit that went on, and I will have my panelists discuss that with us here, introduce them now in no particular order, joined by Brad Olison, the VP of News, Kim Kahn, Senior News Editor, and Stephen Alfer, Managing Editor of Breaking News. I am your host and moderator, Nathaniel E. Baker, Senior Editor of Strategic Contributors. So let's start with Kim to give us the big picture view of what moved markets this week.
Well, I think we had a burst of activity today that kind of shook the markets up. We had, especially in the bond market, you had treasury yields tumbling, on Austria going into lockdown for 20 days. And also they'll be having a mandate for everyone to be vaccinated as of February 1st. So that, had a flight to safety, especially in Europe, but U.S. Treasuries followed suit. And we have now the 10-year yield going closer to 1.5%, where it was kind of at the beginning of the month. And as you've seen, kind of with the stock market, it's hard to tell when there is a risk off move, because people who go risk off go into these big mega cap tech stocks. So you have so you have the Nasdaq now up 1.5% for the week, because people perceive that, okay, well, things are getting risky out there. I don't like bonds as much, but I'm definitely going to go into the big 6 mega caps and secure my money there. So we have this disparity you can see between the Nasdaq and the Dow, which is getting hit with with rates tumbling, getting hit with financials, and also with energy stocks really struggling because of the tumble in oil on growth concerns with a new lockdown.
Yeah, that sums it up, really, a lot of that stuff. I failed to mention earnings at the outset. And speaking of large caps, Apple apparently is finally going to produce a car, an electric self-driving car, if I'm not mistaken. But there was a lot of movement in individual stocks, a lot of it earnings driven, but not all of it. So Brad, why don't you tell us about that?
This was kind of Kim alluded to. Not much happened until towards the second half of the week. But if you just want to take a look at the week and as a whole, energy prices clearly were the biggest laggard here. WTI crude eased, sort of gasoline prices for those at home listening and who are very sensitive to those. Obviously, it takes a little bit of time for those gasoline prices to hit the pump. Prices are always faster to go up than they are to come down. Gasoline's on pace for its 5th straight weekly loss. So still up 8% from August, but between WTI crude and gasoline, you're seeing some of the biggest energy exposed names like Apache Oil, Occidental Petroleum, EOG Resources, Marathon Oil, and Valero as some of the biggest losers this week. And as Kim mentioned, the resurgence in COVID cases in Europe and lockdowns led to some other weakness in some of these reopening names. Gaming and cruise lines were some of the biggest losers this week, with Carnival Cruise, Norwegian Cruise Lines, Penn Gaming, which has had some of its own idiosyncratic issues recently, and also Caesars. So that's kind of on the big downside. On the macro view, on a single stock basis for the losers, we had Activision. The CEO is under a lot of immense pressure due to misconduct allegations. We had a huge walkout from the staff to protest that particular executive. And then you also had financials, most notably the insurers, which were a bit weaker, potentially on the back of some of these lower rates that Kim was alluded to, and some growth concerns. Some of these insurers make a lot of money on the spread with these interest rates and their premiums. On the upside, M&A was picking up. We also had some activism. QSR, which is the Burger King parent, is buying Firehouse Subs for $1 billion. Southwest Gas, Quotient, which is this coupons.com owner, and Dollar Tree also attracted large activist investors. It's notable that Dollar Tree is the best performer in the S&P 500 this week. That news broke late last week. Moderna, big news, obviously, this Friday, as Kim kind of said, everything's kind of happening today. And Moderna is now one of the biggest movers in the S&P 500. And Nat, as you said, in the earnings front, Home Depot, Lowe's, and Walmart, all kind of indicating the sales are going gangbusters. Lowe's CEO actually came out and mentioned that the macro trends in housing are going to fuel some of this home improvement for some time. Household balance sheets are strong. There's limited homes for sale, so people are just plowing money back into some of their home improvement efforts.
But Stephen, sitting there patiently waiting to give us his 2 cents or more, what were your views on the activity this week and what were you watching?
The John Deere strike got settled this week.
Mhm.
And it's a return to the 70s show, right? The workers, about 10,000 workers, I believe, were covered at $8,500 bonus just for going back to work. Immediate 10% raise, 2 more 5% raises over the next couple of years, and 2 more bonuses. Big boost to retirement benefits, and there will be cost of living adjustments. Speaking of the 70s, will be done quarterly.
Let's move on to the second segment of the show where we discuss our favorite stories, Seeking Alpha articles, research, tweets, or other things that we have seen in our travels. And let's start with Kim.
Well, Stephen just mentioned going back to the 70s. Well, I got a note in my mailbox today. So an analyst note from E.F. Hutton, which is kind of interesting, which gives me a little flashback to the 70s. And also, America's excitement with soccer, another 70s phenomenon that is back because Comcast has won the rights to retain the Premier League, that's English soccer, in broadcast rights for 6 years in a package worth north of $2 billion, which is a lot of money if you've been ever following the trials and tribulations of trying to watch live soccer throughout the years in America.
All right, Brad, what about you?
So a couple of notes on what you guys are just discussing. I've long lamented that soccer is overrepresented in the financial Twitter sphere. I have no idea why the US-based media focuses much time on it. That's just my shout out to some of our American fans out there. And another thing, it's English football, Kim. It's not English soccer. And E.F. Hutton is also interesting because it was part of the DWAC SPAC. That Trump launched. So another blast from the past there. So, that's enough about that. Onto my favorite issue, I guess, this week. We can talk Turkey, right ahead of Thanksgiving. And I don't mean the actual turkey, but obviously Tesla. We always talk about Tesla. We always have to talk about it. Bit of rebound in shares this week, despite this kind of, I guess, prevailing negative news flow, right? Ever since Musk started selling shares, the shine kind of came off the name. He's talking to Bernie Sanders on Twitter about selling stock. And then lo and behold, as you mentioned that at the top of the show, Apple is getting involved in this car enterprise. It's a long-awaited story. I don't know how long we've been talking about it in financial media. It feels like a decade or more. But notably on that front, Wedbush's Dan Ives doesn't see Tesla's end, with Apple's entry into the space. I think he sees plenty of room for a lot of different competitors. And, we have a lot of coverage on the platform talking about how Apple's entry into the space might benefit certain suppliers. So I strongly encourage everyone to kind of take a look at some of the items we've written on, a lot of smaller stocks that might benefit from this entry.
All right, Stephen, what about you?
Just a shout out to the podcast that I do each week with Aaron Task. We had Lacey Hunt on as a guest, and I've spoken about Hoisington Investment Management. Hunt and his partner, Van Hoisington. Those guys have been steadfastly bullish on long-dated U.S. Treasuries for I don't know how many decades now, through every single inflation scare, and they've always turned out to be right. So I thought it was particularly interesting to talk to them this week with headline inflation now 6.2%, and they remain bullish on long-dated Treasuries. They're very long duration.
But for me, I want to once again raise attention to the type of thing that you do not see anywhere but the top of bull markets. And that is the attempt this week by a number of individuals to buy a copy of the US Constitution. I do not know what prompted these individuals to do this. Maybe they just have too much time on their hands and too much money. And they touted this revolutionary way of crowdsourcing, of collecting their money and making a bid through the Sotheby's on this, using a technology called blockchain, completely ignoring the fact that this technology has existed. Crowdfunding is nothing new. It's probably at least 10 years old. and also telegraphing how much they were going to bid on. And to the surprise, perhaps of nobody, they did not, thankfully, I would add, win their bid for this copy of the US Constitution. I say thankfully because they don't know what they would have done with it. Nobody knows what they would have done with it or what the outcome of this would have been. In the end, it was a nice little publicity stunt for the Dow or whatever that is. All these
not to be confused with the DAO.
Right.
DAO.
DAO.
Decentralized Autonomous Organization.
Oh, you know what it means. Okay.
Yeah.
Which is somehow related to NFTs, non-fungible tokens, right? But not.
It's somehow related to crypto and blockchain. Yeah.
Right. And they did this using Ethereum, I believe. Anyway, so this is just, I mean, I don't know. This is the type of thing you see at the top of all markets. This whole crypto party is going to end one day, and it's not going to be pretty. That's my forecast, and I'm sticking to it.
Sounds like a bad National Treasure sequel.
Yeah, right? Ugh, can't make this stuff up.
I know Nick Cage needs some publicity. So
he would be paid in crypto immediately. You know that.
Crypto, by the way, having not a very good week either, down in the mid 50,000s from what I could tell. Bitcoin at least. Anyway, that's where we are this week. Thank you all for watching and listening as the case may be. Reminder, you can get the video at 4 p.m. or so on Friday afternoon at the website seekingalpha.com. And the slightly louder audio version of the podcast airs on Saturday morning at 6:30 a.m. through the Wall Street Breakfast podcast account. And with that, we wish you a happy and safe weekend and look forward to speaking to you again next week.